What's going on, guys? Mike here, and welcome back to another video. Today we're going to cover a number of topics. One is going to be kind of current market conditions. I really want to talk about Nvidia and how their price is, you know what. I also want to talk about AMD, kind of highlight a little bit on their earnings report, and just kind of give an IT professional's perspective on AMD themselves and what their future growth might be. Since obviously it's been a month since the last time we've done this portfolio update, we've had some things happen like the Bank of Canada interest rates that I want to quickly touch base on, and then of course talk about my portfolio. I'm going to be going over the year-to-date performances, some potential pivots that I want to make coming into a lower interest rate environment, and I also want to talk about or highlight on kind of a topic that's come up a number of times in the last few months here, and that is touching base on a 25 rule that I'm going to talk about a little bit later on in this video. So let's get right into it. We're going to start off with Nvidia here. So I find it quite unreal on how the stock price now is at almost at $690. I just recently did a Nvidia stock video if you're new to the channel, and the price 2.5 weeks or 2 weeks ago was at $545 or $547, so quite significant in difference. Now, me personally, at the $400 mark, I was like, nope, it's not going to go much higher. This is it. Fear of missing out. I'm not going to buy into it. I kind of wish I just gave into it at that point. I would have been up so much money at this point. Again, I don't personally invest into Nvidia. I get my exposure through the XEQT ETF. But man, this is starting to get a little crazy. So with Nvidia though, I just want to kind of highlight here that some analysts are changing their price target from $625 to $800 while still maintaining an earnings multiple of 27. So that's pretty crazy. So if you remember from the Nvidia's video that I did, we were kind of basing it off of these numbers here, and still on a price to earnings ratio of 27. So this one here specifically has increased slightly on the stock analyst website from 20.91 to 21.04. Not a drastic change. And then in the year of 2025, it has increased to 24.52, which was originally 2.5 weeks ago, 24.12. So these guys have made slight adjustments, not as aggressive as some other analysts here that are being reported, which is obviously increasing the price within Nvidia. So I just kind of updated this chart here. So this is again what we used on my last Nvidia's website or video. And I just kind of updated this here. So at a $29 earnings per share at a multiple of 27, we're looking at $783 for a stock price. Now, me personally, when we talked about this last time, at that $650 mark, I did kind of feel like it was going to take longer to get there. But it just shot right through it. So I am very curious to see how far it'll go into the 700s and will it reach that $800 mark. So their earnings per share is coming up on February 15th, and we definitely will review that come sometime within that time range. So if that interests you, definitely be sure to hit that subscribe button because we will be covering that on this video. So I do want to just kind of go into AMD because people are starting to realize how AI is not just a Nvidia thing. So AMD obviously isn't anywhere near what Nvidia is today, but I do want to kind of talk about it. So Nvidia is definitely increasing their R&D. They are releasing AI platform within their portfolio of technologies. And like I said, I kind of want to just give you guys a bit of an IT's perspective in regards to like business continuity. So right now, Nvidia obviously has the market share of AI, right? A lot of the technologies are using their GPUs to perform on. So, but as a business continuity aspect, enterprises are going to require some sort of second alternative, right? They don't want to put all their eggs into one basket and fully rely on Nvidia, right? So by AMD kind of coming up to the plate here, it's going to hopefully reduce the cost that Nvidia is charging because they are capitalizing on massive profits right now, which is obviously reflected in their stock price. But again, based on business continuity, it is always not great to just have only one business that you can rely on, right? So having that alternative, which is going to be obviously AMD, I could see after things start slowing down for Nvidia come 2025 and into 2026, which we talked about in the Nvidia video. I could see those particular years being the years for AMD. So it is something to kind of potentially capitalize on. Again, it's a magic 8 ball situation. It's my own personal opinion. Just being in the IT world, I do think that with AI and enterprises needing a second alternate option, AMD is going to be the choice. So I'm not saying that they're going to be better than Nvidia for the AI platform, but again, they're going to be an excellent option, right? So again, I assume things are going to increase for them. So in their last earnings report that they just came out with, they were up already 10% on revenue and 21% on gross profit, with their gross margins being 47%. So again, Nvidia being at the 74%, which is unreal and most likely unsustainable. I do feel that these are going to increase for AMD. So again, we're just gonna kind of sit on the sidelines here and just kind of watch how this develops. But I am going to be kind of paying a close eye to it. So if you guys have any comments about this, if you guys are a part of this if you're investing in Nvidia and AMD, I'd be very interested to understand, I guess, your perspectives on this. So definitely don't be shy. So just kind of pivoting a little bit. Again, we're just kind of this video is primarily for like over the last month of kind of what's changed. Obviously, interest rates are a big topic. So the U.S. Feds and the Bank of Canada held interest rates. This was, I think, kind of expected globally. I did have a community post, and most people were voting that this was going to be held, which is obviously what happened. Now, I'm kind of predicting that, and also I'm kind of reading it too. It's not just coming straight out of me. But I do kind of agree with everyone's predictions that we could probably start to see the interest rates declining come middle of the year, right? So starting into summer, leading into the end of the year, I'm going to assume we're going to be at a lower interest rate than we are today. Now, by how much, I don't exactly know, but I do have a pivot in my portfolio that I want to make prior to the decline, which we're going to be talking about here shortly. So if you guys agree, definitely like this video if you agree with those predictions, and we'll see what happens. So just kind of going into the year-to-date performances of the portfolio. So if you're new here, I will kind of just do a quick touch base on the different portfolios here in a few minutes. But I kind of like to just kind of show the performance of each account, which is a Lira, an RSP, and a TFSA. And I do have each one of them kind of constructed differently. So it is interesting to see how they perform independently. So my Questrade Lira account is a kind of a set and forget. It's 90% XEQT and 10% bonds, which is in a ZAG ETF fund. So this one came in for the month of January at 1.74%. And again, this is the set and forget. No playing. It is just buy the ETFs and don't do anything with them. And it's actually scored the best. So kind of going into my RSP, this one I think is the least performance of the month, coming in at 1.04%, and I'll show you guys the portfolio here shortly. Just give me a few minutes. And then my TFSA, we'll just kind of load it up here, has come in at 1.17, so very, very close to the RSP. But yeah, the Questrade one, almost near that 2% mark, which is pretty crazy. So again, I have a bit of an itch. I need to play, buying some REITs or some blue chip dividend stocks. But maybe that actually does hinder my performance. I don't know. Leave a comment below. Let me know what you guys do. So the overall performance of the portfolio came in at 1.31% for the month of January, or year to date. So I'm actually pretty happy with that. That is an investment growth of $813. And we did receive $51 in dividends over that month. So you can see PSA being my top one at $18 for the month, which again, if you're unfamiliar with what PSA.to is, it's a high interest savings ETF. And I'm going to be talking about this because this is the pivot that I'm going to be considering here shortly. So kind of just quickly recapping what my targets are for each of the portfolios. So like I had already mentioned, my Questrade Lira account is a set and forget. I can't contribute to it. It is locked with the funds. And again, like I said, 90% XEQT, which is my core holding, and 10% in ZEG, which is a bond ETF. Next one being my TFSA, and this one's, like I said, I kind of play around with a little bit. My goal is to have a roughly around 75% in XEQT, and then with the remaining percentages, I kind of play with, right? So I have 5% of Enbridge, 5% of Plaza REIT, I have 5% of Smart Centers, and 5% of TELUS, and 5% of TD Bank. Then going into my RSP, again, my XEQT being my core holding at 70%. And then PSA, I don't really have a specific target. This guy, I just kind of lump some money into when interest rates are going up. Again, we're going to talk about this one here shortly. My target here, though, is 5% for RioCam, which is another real estate REIT. I have 15% target for VDY, which is the high dividend payer for the TSX. So like it's very centralized on energy as well as financials. And then again, 10% being into bonds. So that's the portfolio makeup. Like I said, it's really interesting to kind of see how my set and forget is performing the best. So we're gonna have to see how that plays out for the rest of the year. So before we talk about the PSA.TO, which is the high interest savings ETF, I want to just kind of highlight the performances thus far for the 1 month we're into 2024. So you can kind of see here, TELUS is actually being my top performer at 3.6%, and then of course XEQT coming in at 2.1%. And the rest of them not really being much, right? So PSA is obviously paid out half a percentage point, but that's actually just the interest that it's accumulated. Bonds are down. I actually suspected that these would have been up compared to down, but maybe it's just because the interest rates haven't dropped yet. But I do think that these are going to bounce back here once interest rate starts being cut. TD being my biggest loser so far at 2.9%, which I'm okay with because I kind of like how it's in the $80 range right now, so I can kind of load up on it. And over the course of like the next 5 years, I really do feel that these financials or TD Canada Trust is really going to bounce back. And then REITs still not really performing all that well. They kind of shot up at the end of the year of 2023, and they haven't really done much so far in 2024. Again, I do believe that it's kind of just waiting on interest rates to kind of come back down. So I don't expect much movement there, but those are kind of weighing down my returns overall so far. So that's kind of that. So one of the things I really want to talk about is the Purpose High Interest Savings ETF, which is PSA.TO. Now, I've made a comment out on the community posts about this. People are voting, yes, no, about getting rid of it, but I'm really curious to start a conversation here on what you guys think. So I have $4,000 into PSA.TO, which is again a high interest savings ETF. If you're unfamiliar with PSA.TO, I do have a video on it in this channel. You can definitely check it out. But as the interest rates are going to go down, obviously, this is going to start paying out less, which my threshold was about 5%. So it's going to be not too long before it's not paying anywhere near that, and it's probably going to level out around that 2.5% is my guess, maybe 3%. But I kind of want to sell this out, and I want to distribute it back into either like XEQT, ZEG, maybe some REITs that I feel that are going to pop once interest rates kind of go down. Curious your guys' thoughts, but this is kind of a pivot that I'm thinking of making in the next couple months here prior to the interest rates being taken down. So yeah, like I said, leave a comment below. I'm very curious on what you guys have to say about that. So one of the last things I want to talk about is the 25 rule. So this has come up a number of times of people asking me on, comments within, on this channel, maybe it's on Reddit. But a lot of people have always asked about, asset allocation. And so I really want to talk about the 25 rule. And so I typically attempt, and it's never always perfect, but it's always my goal, is to have no more than 20% of my portfolio in a single sector and no more than 5% in any single stock. So if we go back to my my TFSA here, for example, you can see how my targets on each of these individual stocks are no more than 5%. Now, I do want to mention though, like when I compare to say my RSP, which has VDY in it, which has 56%, I believe, in the financial sector. I think it holds like I think it's like 6.5% of TD in this particular ETF. Now, you kind of have to watch that, right? Like, I don't want to get too heavy on specifically TD, because if TD has a major meltdown, I don't want to be brought down on my whole portfolio based on just one stock having an issue, right? So you kind of have to play with it a little bit. But my TFSA is pretty small, so that 5% contribution is very, very small. But as my TFSA grows, I will have to be kind of careful on not allocating too much. I might have to bring these things down to maybe 2.5% versus the 5%, because again, I don't want to overweight myself on individual stocks. Now, like I said, I just really wanted to bring this up because I do feel it's a pretty good rule of thumb. Some people are like loading up on Nvidia. And what happens if Nvidia has a bad earnings call here on February 15th? Well, if they have like 50% of their portfolio of Nvidia, they're going to have a really bad day. So again, it's my personal rule of thumb. I wanted to share with you guys because a lot of people on Reddit that I've talked to have mentioned that it helped them kind of construct their portfolio and alleviate some risk, but also be able to invest into individual stocks. So again, leave a comment below if it's something you follow. Potentially it's something that you don't follow and you are willing to accept those risks, or maybe you don't think there's risks much with it at all. I'd be curious to hear your guys' opinion, but I hope this video was helpful and I look forward to seeing you next time. Catch you later.